Good evening everyone, this is Srikanth Rajan and welcome back to the Market Pulse video from mpiinvest.com. Well, this is a report that we do every Sunday sharp at 7 p.m. where we discuss about what happened last week in the Indian stock market and the global markets and also what could be expected out of the next week. So coming to the first thing, I'm sure all of you who are actively participating in the market are aware where Nifty is. Of course, Nifty is close to its all-time high and it was a great close above 18,800. So that was a fantastic thing on Friday. So if you look at the big rally that came in the second half of the day, took it almost close to all-time high, and from there was a profit booking which kicked in and we could see the Nifty coming down and closing just above 18,800. So that's a really good sign, and in spite of this thing that institutionals even at an all-time high are net buyers is something that is inspiring more confidence in the market right now. So this is a situation where if you look at what we spoke in the title, since Nifty is at all-time high, is it time to book partial profits or is it time to add more? In fact, I am on the other side. Any small fall from this area, I would be looking at adding more into the equity market. But reason is simple, that the markets are looking really bullish. So I'm not telling that there could be a linear rally. So that would never happen in stock market, right? So the rally will happen in different sectors at different times, but then staying invested during those rally is something very important. If you think of waiting for the rally, you will just miss out on the rally many a times. So it's very important to be staying invested. That's something very important. And at this point of time, as my equity holding is slightly increased at this point of time, I would actually be looking at increasing it more as we go forward. And each correction could be an opportunity for adding more, and especially all those stocks which have not been performing well for so long will start performing when the market actually gets into a bull run. So if you look at that way, one of the sectors which has not been performing at all for a long time is the IT sector. Now imagine if IT sector just joins the rally, how it would be, and that would be amazing. In fact, this leg of the rally has been mainly led by Reliance as a single stock, and also along with that we've got a lot of automobile companies actually joining the rally, and also we could see FMCG and Bank Nifty kind of losing steam slightly in spite of the rally that it brought in just some time back. So things are kind of looking great right now at this point of time in the market, in the stock market. Like I told you earlier also, the expectation is that the markets can rally up to November. After that there might be some caution, but then I'm having a feeling that we could see some good rally continuing, of course with its own up and down, but then finally a good rally till November. So this is where we could probably expect 19,000 to be broken, and probably we can go slightly higher as well. So this is the expectation I have right now. Now if you look at last week, apart from that, on Friday when Indian markets were hitting close to its all-time high, the US market had this quadruple witching day. Now what's a quadruple witching day? So unlike Indian markets, they have slightly different way of expiry. There, the index futures and index options and stock futures and stock options, they expire only once in a quarter together on a day. So that was on Friday. Sorry. So that was on Friday. So because of which, of course, the markets were expected to be volatile, but though not very volatile, US markets have been stable and closed slightly negative. That's a good thing, I would say, because SGX Nifty would be staying stable, and we could expect if the market opens flat tomorrow, there could be chances the market could actually see some buying, and if that buying happens, there are chances of a rally continuing. Why am I telling you this? Because one important thing you need to note, Monday is a market holiday for US. So we would not be getting any market cues from the US until Tuesday evening. So because of that, the markets are going to be kind of volatile. Of course it's already, but then since the markets are close to all-time high, the volatility is going to kick in more. So that could be one thing, a word of caution to all the traders, to be kind of light on your trading. So that's something very important. And next important thing is, for this week, we don't have any major events as such in India, but then in the US, there are several Federal Reserve members speaking this week, and of course we have Jerome Powell testifying on Wednesday. So again, Wednesday being just one day before the expiry, we could expect the volatility to be on the peak. So if you look at that way, so Wednesday is on 22nd, which is just one expiry before the monthly expiry. So that is something which could be expected for Thursday. So the effect of that would be seen on Thursday in the market. But then it's very important to tell you that since markets are close to 19,000, which is 18,800, which is close to 19,000, right now if I look at the range for this week, I would say the range would be 18,500 to 19,000. So 18,500 to 19,000 could be the range. But then of course it could be so volatile that at times it could even break 19,000 for a while and come back. But for this week, I'm expecting the market to be closing within this range of 18,500 to 18,900. I could be slightly more bullish, saying 18,600 to 18,900 to be on a slightly aggressive range. But then 19,000 could be a slightly weaker link at this point of time, because the way the markets are bullish, there are chances that 19,000 could be broken as well. But however, 90% chances that may not happen as well. So that is the view on now. So 18,600 would probably never be broken. There are very low chances it could be broken downside. 19,000 is a good resistance, but 90% chances it may not happen, but there are 10% chances that it can happen. So that is the situation right now. So when the markets are actually close to all-time high, these are times where markets can turn unpredictable quickly. So it is time to be actually safe and to be not deploying very high capital into your trading. This is what I would suggest personally. So this is something that we had to speak about. The next important thing is, of course, coming to the sector. So if you look at sectors, right now Bank Nifty has had its bull run, and in fact Bank Nifty is kind of still hesitating to be having a big rally, majorly because a lot of people are concerned about the HDFC Twin merger. So last week there was a concern that if HDFC Twins merger happen, there are many mutual funds which are holding HDFC and HDFC Twins, and as per the SEBI rule, since they cannot hold a certain percentage of more than certain percentage of stock in a single, investment in a single stock, there are chances that all these companies which is having investment both HDFC and HDFC Bank can actually liquidate some of it to kind of stay within the SEBI range. So that actually has seen some negative impact on HDFC Twins, and that has been holding them back. In fact, if we see, we have been talking about HDFC merger for quite some time now, and it's taking a really long time. But along with that, it's also creating trouble to the market. But then, if you keep the negative part aside, if you look at the positive side, one, since HDFC Bank and HDFC have not been performing well, it is actually time for them to perform. They are heavyweights in the market. Second, IT sector is again and has been very weak for a really long time, and it's time for that also to kind of start performing. Third point, Oracle has come out with good results. Oracle has seen a major rally in Indian market as well. So I'm sure all of our members in MPI Invest who are holding OFS's stock are really happy with the kind of returns that we are sitting. It's already close to 20% returns after we added the stock, and also we received a 6%, close to 6% dividend on the stock. So remember, we are sitting close to 26% returns on the single stock. So IT sector is looking like it can start performing soon. So that is also a point to note. Now, why I'm telling you all this? Now, imagine a bank, say banking sector, banks in Nifty, IT sector, which also has not been performing great, start performing. These two sectors itself start performing. Imagine the kind of rally where that could be expected in the market. So that is kind of looking really bullish at this point of time. So there are high chances of June, then we have July, August, September, October, 4 months before November. So these 4 months would have some volatility, but then I'm kind of getting a feeling that generally, like other years, we might see some rally by November, making the Nifty actually breaking all-time highs and probably creating a new record. So these are all things on the line. So definitely I'm not recommending anyone to book profits at this point of time, but simple stay invested and probably start adding in small time frames in SIP mode. I'm sure you should, for a long-term investor, that would be a great way to make great returns at this point of time. So right now, that's it I had to share. But before we leave, I will tell you something very important for all those people who are looking to invest something in debt instruments. One of the best instruments is, of course, SGB, Sovereign Gold Bond. The issue is opening tomorrow. If you want information on how to invest into it, do connect with us on our website given here, mpainvest.com. You can just go to our website and schedule a meeting with our team member, and You will get all guidance in the right way of to invest into it. And those who are traders, let me tell you, SGP is a great way to invest again, because it holds in your demat account, and it is also considered as cash component for your trading when you're pledging your stock. So that's a good thing. And apart from that, you also get a benefit of the returns on gold, along with an additional 2.5% interest shared additional by RBI, Reserve Bank of India, which is of course the most trustable source that you can actually have in the country. So with all that, it of course makes a great proposition. So if you want to start investing in the right way, do connect with us. We'll help you with the right investment. All you need to do is connect with us on the website and schedule your meeting. So that's it for now. If you have any questions, do put it into the comment section. I would be answering it in the podcast tomorrow. Apart from that, of course, do press the like button if you love the content that we share. And of course, do subscribe to the channel if you have not done that yet. It's of course high time you've done that. And do share the podcast with your friends and relatives to help them learn and invest together with us. For MPA family members, we are getting ready for the next meeting. Of course, meeting starts at 7:30 sharp. So be there. Link will be shared in the group. If you're not an MPA family member, of course, you can join free of cost. Again, come back to us on the website and discuss with the team to know how to be a part of MPA family. Goodbye. Have a great week ahead.